a while, but right now we're going to get to Europe to talk about the markets. They were open today and they were higher. And the big story, France and Austria, as well as 7 other Eurozone nations, downgraded by S&P on Friday. Europe's #1 economy, Germany, did keep its AAA rating. But we want to talk about what's next now with Marc Faber, who joins us by telephone, the publisher of the Gloom, Boom, and Doom report. Mr. Faber, it's always good to talk to you. Is this downgrade a big deal from where you sit? And if so, why and how much of a big deal?
Well, in general, I would say the news follows events. In other words, the downgrades were already discounted by the bond market in Europe.
Right.
So when the news came out, it had no impact. Actually, the market was kind of relieved. It's like when a war breaks out. If prior to the war, the market has already discounted the war and went down strongly, then on the war news, the market then shoots up. On the other hand, if some event happens completely unexpectedly, the market can sell off. But in general, I think that in Europe, the bad news has been now largely discounted.
Okay.
And the market participants, they think that the problems will not be resolved, but that they can be postponed. And this postponement involves essentially money printing, either directly or through backdoor measures.
This is important for international investors who listen in or watch the show all the time and say, boy, it's really a mess over in Europe economically, and just about anybody will tell you that it is. But you're saying expect more, as I say, quantitative easing, which essentially is printing money, both in Europe and I would assume here in the United States as well, which means
yes.
which means what in terms of an investment strategy? You do what?
Well, I think that eventually you want to be positioned more in equities than, say, in sovereign bonds. And you want to own some precious metals as well.
You like gold still?
Well, I like it, yes, but I think the correction is not over yet. I think we had a big correction from the peak on September 6th when gold hit $1,921. We went down to around 1,522 at the end of December. Now we rebounded over 1,600.
Yep.
I think we can have another leg down. But in general,
when would you buy gold then? When should someone buy gold?
I beg your pardon?
When would someone buy gold sensibly then, if there's another leg down? To what?
If I were an investor or a saver, I would buy every month a little bit. And not everything at the same time, because what you want to essentially have is insurance policy.
The other thing I was going to ask you about, there's gold by the way, 65, is that people, every time something happens, everything in the world that's not or anything else, their money at the United States, and you could only get paid 1.8% or thereabouts on U.S. government debt for 10 years. Right. Is that foolish at this point for investors to do that, or how do you look at that trade?
Look, it's very difficult to tell when the central banks are manipulating the markets and keeping interest rates artificially low, what is foolish or not. Somebody may argue, it's not my argument, but someone may argue, okay, I buy a 10-year treasury or a 5 hardly any yield, but back money, print money, so you don't in the sense of non-payment, risk of through depreciation, but not principal.
That's true.
And so someone says, okay, I want to raise 20% every year.
And that's happened now for 10 years or so.
Not only 20%.
Marc Faber, thank you very much.
Wish you all a happy new year.
And the same.